Welcome to the weekly trade plan for the week beginning the 14th of March 2016. Now, of course, for any of you who haven't watched this video, this is where I give an insight into what the FX team here in London is looking at in terms of currencies and trading plans, etc. And this is the general template of the plan we'll be following for the coming week. Now, we'll start with the current sentiment. Now, there's been a very interesting week ahead. Last week's trade plan was to sell dollar CAD. You can see through the week it's dropped nicely. And I want to just highlight that this principle of selling on the rallies, because the week before we were looking at pound dollar and that thing, we were looking to sell that and it just went up all week. And we were trying to basically explain how if the price goes the opposite way to what we think it's going to go, then actually there's no real trading opportunity. You see dollar CAD here tended to sell off on the rally. So for example, Tuesday, the price broke the high of Monday. So on Wednesday, there was no real opportunity to sell dollar CAD if you were day trading using our methods. Now, if you've got your own day trading method, which gives you a sell signal, etc., that's fine. Please use that. But the benefits of selling on the rallies were that when Wednesday's drop happened, then we had lots of opportunities to sell on the rallies. You can see the price pulled back on Thursday and then the price pulled back again on Friday. And there was ample opportunities. Monday, there was a pullback. So pretty much every day bar Wednesday, there was an opportunity to sell dollar CAD on those pullbacks and potentially make money. You might have lost money on Tuesday, depending on how you manage your risk and get out the trade. But generally, overall, we had a profitable week with our team here on dollar CAD, just selling those rallies. It was fairly straightforward. And the biggest reason, of course, was oil rallied back over $40 a barrel, which, of course, gave strength to the Canadian dollar, along with other factors, including the fact that the Bank of Canada are on the fence for the time being, fairly neutral, not looking to do any more in terms of their interest rates. Now, the other big thing that happened in current sentiment was, of course, euro dollar, which we'll be coming back to in a moment. The sentiment on that was ridiculous. You see here, the ECB announced an expansion of QE and the price dropped down here into the 107s. And then Draghi in his press conference said one line which turned it all around. He said that the bank don't see any need for further interest rate cuts. So he didn't make any mention of QE. There's no mention of anything else, just the interest rate cuts, which are basically at zero already anyway. He doesn't want to hurt domestic banks, so they're probably not going to cut rates anymore. In terms of a tool, that tool's been used up. And the market basically, in my opinion, overreacted and sent the pair all the way back up to 112 based on the fact that the market's now thinking, well, maybe the ECB have used all their bullets, they've got no weapons left, and if things don't get better, there's nothing they can do, etc. Which, of course, is negative for the euro, but it's also negative for the expectations of QE. So everyone's selling euro because they think QE is going to weaken it, and it's going to be this big have this great impact. But in the short term, the market was like, well, that's probably not going to happen if the ECB is starting to run out of tools. And that's what prompted this big surge in euro dollar back. Now, we'll come back to that in a moment, but they're the big things moving current sentiment at this moment in time. So what about target currencies? What are we going to be looking at next week? Well, next week, if we look at the calendar, we have a massive week in terms of central bank events. We've got the Fed, we've got the Bank of Japan, we've got the Swiss Central Bank, and of course we've got the Bank of England from the UK. So there's 4 big meetings that we're particularly looking at. Now, based on everything that's happening, we only really expect one of them to potentially be a major event, and that of course is the Fed. And the reason for that is because last time around, the Fed showed some concern. They basically said all these things that happen in the global markets, oil and China, we're concerned about that. That could have an impact on our policy. And of course, the market sold off the US dollar because they started pricing out the possibility of any more hikes in 2016. Now, since then, the labour market data and generally the data from the US has been quite good. Labour market, I think last week NFP smashed it. Expectations over 200,000, well over 200,000 jobs created. And in general, the data has been pretty solid. Inflation data is not that bad. It's pretty solid. It's on an upward curve. So basically, the data domestically for the US is looking good, while of course the Fed have got one eye on these global concerns. So the thinking is, if the Fed show any hint of being slightly hawkish or more positive than they were, And they've got a fair reason to do that because of the data we've had since then. This could obviously give US dollar strength and we could look to buy it. So a target currency for this week is the US dollar for sure. Now the other target currencies are the Japanese yen, the Swiss franc and the pound. But of course, as with the dollar, we only want to look at these things after the central banks have spoken and made their move. So what we want to do is wait to see what the central banks do or say. If they change their tone, maybe look for some opportunities in line with that. But generally, the biggest chance of that happening is with the US dollar and the Fed. So there's 4 target currencies there that we're looking at. The dollar, the Japanese yen, the Swiss franc and the pound. But the biggest focus should be on the dollar. And we're looking out for the Fed to have kind of a more hawkish positive stance than they did last time around. This could potentially give us some trading opportunities. What about a trade plan? So our trade plan for the week, with all that being considered, is on the euro dollar, which we started looking at the beginning of this video. I'm looking, and the team here are going to be, we've discussed this at length, and we just feel that the overreaction to Draghi's comments on interest rates was massively overdone, and we feel there's going to be an opportunity next week to sell euro dollar. Now, as ever, we try and give you the long-term levels as well. If the euro dollar rallies to 113 or 114, we can look for some shorts off those levels as well. There'll be at least a reaction off the 113 and 114 psychological levels for various reasons. But if you look at the 4-hour chart here, you can see this is a massive level of resistance into here. There'll be a nice reaction off 113, and even if it pops, think of all the stop loss orders above 114 or just above this high at 114. Plus the fact it's a psychological level, there should almost certainly be a reaction off there too, unless something absolutely major, dramatic happens, which of course we're not expecting. So the trade plan is look for those levels on euro dollar, and at the same time look for selling opportunities, and as day trading opportunities, look to sell the euro dollar through the week. Again, use your day trading strategy if you have one. If you don't, the one we use, of course, is the one we've gone over in every video. We sell those rallies, look up into those pivot point confluences, pivots and fibs, look for the confluences to sell into as the price pulls back. Of course, if the euro keeps rallying, you're not going to get, we've explained this the last few videos, you're not going to get a day trading opportunity. So it's kind of an extra layer of protection. But if the price starts falling, look to get in on those rallies and sell them, because we think euro dollar is massively overbought, considering the reason why it was bought in the first place, and this could be a great opportunity to make some pips on the way back down. So in terms of a target, I think 110 is a reasonable target for now. I'm not expecting it to retrace the whole move, but certainly think it should probably get back to 110 over the next week or so. And that's that. So we've got a couple of great opportunities. First of all, if it does keep rallying, look to sell from these levels. If it does kind of sell off, look to keep selling on those rallies from those confluences, or whatever day trading strategy you have that gives you a sell signal. But that's the trade plan. We're looking to sell euro dollar just because of the massive overreaction. So I hope that's helped. That's the trade plan that we're using here in London for the coming week. And we'll, of course, be back next week with our trade plan then, based on the fundamental events as they unfold.